when you trust in Bitcoin, you're trusting in physics, you're trusting in mathematics. Though we have all the respect for the enormous innovation that comes out on other layers, on other chains. But I think it's hard not to argue that to some degree with, say, proof of stake, you do have some trust in people, some trust in a handful of powerful players that are there, which when Bitcoin, as long as it just keeps doing what it's doing, which is putting out another block every 10 minutes, it's going to continue reshaping and revolutionizing human culture, human finance, and how we transfer value between each other globally and within communities.
Woo-wee. Alex is in the house today. I'm here with Hadan Esperidiao, who is on the Alex Foundation. As you know, Alex Bridge has been all over the scene over the last, I guess, maybe 6 months since ordinals really popped up. You know, they're built on stacks, but they've been diving deep into the ordinal space and contributing in a variety of ways. Most recently with this on-chain indexer and this cohort of helping the centralized indexing companies, to create this on-chain indexer to help interpret the data. But Alex is much more than that, and we're going to dive into every single piece of it because I'm actually very curious myself. So Hadan, really appreciate you for coming on the show today.
Absolutely. Pleasure to be here and join you.
And you guys are absolutely monstrous. I've been trying to find a different way to talk to somebody from the team. You have like multiple founders. There's a foundation, right? It's on stacks. You're going bridges back and forth. Easiest way to start is just tell us a little bit about yourself, and then also the Alex Foundation, and then we'll dive into more of the technicals afterwards.
Sure. And so my own background was Harvard physics, but then right after school, I joined Goldman Sachs in investment banking. And that's how I met Chanda, co-founder and CEO of Alex. And then after, about a decade in TradFi, I left a bit, did some entrepreneurial ventures, very Web 2. But then in 2021, I was in touch with Chanda. I was already, getting more into crypto myself. And she mentioned that she was looking into building DeFi on Bitcoin, which really perked up my ears because up to that point, I didn't even know if that was possible. DeFi seemed to be something that was going on Ethereum. I listened to it. I was immediately hooked. It totally clicked and made sense. And that's when I really came on board. That was about a month or two before our initial testnet with our mainnet launch then in January of 2022. So, I would say, with Alex, there's Alex Go, which is the tech company, and there's the Alex Lab Foundation, which is it's basically a liaison or a decentralized nonprofit that basically takes on the initiatives of growing the Alex community, receiving feedback, seeing where we can improve, where our community is, spreading, education, I would say, is really key in what we do, and just increasing awareness about both Bitcoin, DeFi, crypto, how Bitcoin DeFi is possible, how Alex facilitates that, where our role comes in. And yeah, it's been an amazing 2 years, and look forward to many more.
It's funny. I posted a DeFi on Bitcoin kind of historical timeline maybe about 2-3 months ago. And it actually has somewhat of a long history. The issue with DeFi and Bitcoin, though, is that there's a lack of standardization because there are no smart contracts, or at least until you start going to the L2. So everyone's, they're kind of just coming up with their own methods that they implement and calling it, DeFi or whatever kind of a variation that it is. But going back to, since you joined in those early testnet days of, mid 2021 and up until the mainnet launch in the beginning of 2022,
right?
What was that building process like? What were those initial conversations?
Sure. And so, basically the idea for Alex was co-founders, Dr. Chanda Shu and Rachel Yu, were discussing in the spring of 2021 just how, DeFi was really taking off on Ethereum. And, and both had long careers on Wall Street and banking as well. Chanda Shu in particular, like over 2 decades, managing director, Credit Suisse first, Boston, managing director at Morgan Stanley. And so what they saw was that this was really the potential to help create the finance of the future. And that, working in traditional finance directly, you have this very direct firsthand experience of how, this is sort of like finance in the fax machine era. So much of it are these kind of like legacy institutions. You have the trade settlement that takes, like T plus 2 days. You have these enormous middle and back offices to deal with all these levels of compliance. So there's just a huge amount of institutional bloat and things that are being done simply because this is how it's been done for 100 years. And there's no incentive, there's no real motivation to change or innovate or spark something different. And so when they saw the rise, of DeFi, it's almost as though, watching, and then a lot of people have drawn that analogy, but being in 1999, 98, seeing the rise of the internet and realize that, hey, this is really going to change everything, particularly with DeFi and finance, how there's that exchange of value over the internet. And with finance in particular, it's how you exchange value over time. Because the question we get a lot is, what's the difference, say, between Bitcoin as a currency and then Bitcoin DeFi? It's that, as a currency on the Bitcoin layer one, you have these send and receive transactions. And so you have money at the present moment. And what finance basically evolves is how money is carried over time. And that at any given moment, there are people who need money right now today and are willing to pay for it. And there are other people who have money and are only going to need it tomorrow or a month from now or 10 years from now. And they want to earn for loaning that money out. And that's really the sort of the backbone of modern finance. It's the backbone of the modern economy. And to bring that onto blockchain was an incredibly exciting possibility. And so you have basically these Wall Street quants, and these are, these sort of like brainiacs, these PhDs who come from statistical analysis, computer science, data sciences, mathematics PhDs, who are used to working with these massive data banks of data, who help build these algorithmic fast trading models that so many Wall Street banks and hedge funds use. And they got into the discussion of how can we do DeFi? How can we build the finance of the future? And really, I think the fundamental question is, it's like, what is the foundation that you're going to build on? Are you going to build a house on sand, or are you going to build a house on rock? And I think that's when it gets down to it, is why the founding team made what was at the time a very contrarian decision, which was to build DeFi, but on Bitcoin. Because, DeFi was something that occurs on Ethereum. It was something that was surging on Solana and Avalanche and all these other layer ones. But Bitcoin is really unique. It is really an incomparable asset, not only in how it emerged, which was spontaneously. So there was no pre-mined supply. There was no, there were no VCs. There was no insider team. It began as this collectible, and then slowly began to become this store of value. It achieved this early degree of decentralization that simply is impossible today. And not only that, when you look at in terms of the track record that Bitcoin has had, and that the modern code is very close to what Satoshi first spun up, is just absolutely mind-blowing. The level of decentralization, the level of security that's there, really the significance of proof of work, which we can't overlook or underplay. Because through proof of work, you're actually anchoring Bitcoin to the physical realm. Energy is that anchor. And without that anchor, it's impossible to have this self-evident proof. When you trust in Bitcoin, you're trusting in physics, you're trusting in mathematics. And though we have all the respect for the enormous innovation that comes out on other layers, on other chains, but I think it's hard not to argue that to some degree with, say, proof of stake, you do have some trust in people, some trust in a handful of powerful players that are there, which in Bitcoin, as long as it just keeps doing what it's doing, which is putting out another block every 10 minutes, it's going to continue reshaping and revolutionizing, human culture, human finance, and how we transfer value between each other globally and within communities.
Wow, I can tell that over the last 2 years, you've as have really dove into a lot of the technicals and also a lot of the philosophical and ideological approaches that kind of exist within Bitcoin, right? Outside of kind of this rock foundation from a technical perspective, you really have also a very strong foundation of a built-in community that's been around for, right. It would have been 12 years at the time of the creation. But then moving on, you realize, okay, we want to build on the strongest rock. It's really absent of a lot of these VCs and maybe these manipulators or kind of these capital vultures in essence. At that time, you said you joined the team in the middle of 2021. What led to the decision behind building, or utilizing Stacks versus some of the other options that were there? Stacks 2.0 had just launched, I believe, January 2021.
Yep.
And then the only other options that really existed was either the Lightning Network, the Liquid Network, and I believe Rootstock, or maybe the four options that Alex could have chosen at the time.
Right. And so the way that came about is that, in order to build sophisticated DeFi applications, you do need smart contracts. It's important to have that level of programmability. And, so for example, on Lightning, it isn't a smart contract layer 2. It's a scalability focused layer 2. And with the other Bitcoin L2s, really what was the sort of deciding factor were these conversations that the Alex founding team had with Munib and with JP Singh and some of the co-founders of the Stacks layer. The fact that, for example, like Stacks is coded in Clarity, which is a decidable smart contract language. And so it's transmitted and visible on the Bitcoin state just as it's programmed. It doesn't have to go through a compiler. The fact that, Stacks has this, unique or proof of transfer mechanism through which it shares consensus and computing power with the Bitcoin chain. And so, the way that I've described that to our community is that if to mine a Bitcoin block, you have to expend energy in order to do so. Stacks is almost an iteration of that, where you have to expend Bitcoin in order to mine a Stacks block. And so every Stacks block is born out of this Bitcoin transaction. And with that Bitcoin transaction, you have a record of the state of the Stacks blockchain and network. And so it was the combination that you had this remarkable smart contracting language. You had this very a dedicated community that Stacks had already possessed and grown, and you also had the fact that all transactions that occur on Stacks, and so all Alex transactions, have the security assurance of final settlement on Bitcoin itself. Stacks does have a token, which, I understand that to some of the Bitcoin community is a controversial aspect, but that token is necessary, one, to allow a way to pay for the computation. And it also allows for a global state of ledger. It allows you to maintain this continuous history of everything that's occurred on Stacks. And so, we're conservative when it comes to the Bitcoin L1. That the protocol has to remain immutable. It has to remain the same. But we're very open to experimentation on L2s. And we're, very excited to see what else that emerges. We do believe that to some degree, the future is going to be multi-chain. And that's something that we're absolutely open to. We have built, the Alex bridge, connecting us to liquidity on Ethereum, liquidity on the Binance chain. But when it comes to, say, finance itself and recording these transactions of very high value, basically in the same way that ordinals are remarkable because you're creating these true digital artifacts that live on chain, that are inscribed onto Bitcoin itself. Transactions that are recorded on Alex are also inscribed directly onto Bitcoin itself. And so, we build thinking in the long term, thinking of how, it'll likely be the case in 5 or 10 years from now. as you have the tokenization of real world assets, and now you have trillions of dollars in real estate and bonds and these other securities, and they're looking to transact trustlessly. They're looking to transact efficiently. They're going to look at something like Bitcoin DeFi. They're going to look at transacting through Alex that'll have those transactions inscribed on the most immutable and most secure data layer in existence, which is Bitcoin block space. So, it was really, and this was before ordinals, this was before BRC20, but it just seemed like this inevitability that this superior technology will win out in the long run. And it was incredibly exciting to see the ordinal protocol emerge. It was a transformation of Bitcoin from purely a money layer into now this hybrid money data layer, because you still see close to 50% of Bitcoin transactions being ordinal related, that it's actually happening sooner than we expected. And it's incredibly exciting to see. And we really can't wait to see, especially as the next bull market cycle comes around, just how much this is really going to take off and get traction.
Yeah, it is really tough to dismiss, the brand value of Bitcoin as well. Just the simplicity is really what attracts a lot of investors, a lot of capital allocators. They want that safety in the brand, right? And, before we do move into kind of this multi-chain thesis, which is something I also largely believe in, moving into the layer 2 and some of the products that Alex offers, moving down to layer 1 or maybe layer 0, you mentioned that some of the, older, or you say more traditional Bitcoin owners maybe are very resistant to Alex, to stacks, to this type of tokenization. How do you guys manage about balancing that between the community of, degens like myself who are using Alex's BRC20 order book, to trade in this efficient way, but also kind of resonate, with the traditional Bitcoiners who are also holding, potentially thousands of Bitcoin and a lot of capital within their wallets?
Right. Well, I think without a doubt, probably one of the best opportunities that there is in crypto space is the fact that, if you look at Ethereum, I think current market cap is somewhere around 200 billion, and close to, I think it's around 27% is engaged in DeFi protocols. You look now at, say, Bitcoin, you have a market cap, around 500 billion, and less than like 0.01% is engaged or locked into DeFi. And so, the idea is really, how can we, fully like unleash that capital? How can we catalyze, Bitcoin going from, say, a store of value, digital gold, into a productive yield generating asset? And with the Bitcoin community, obviously it's a continuous work in progress, because Bitcoin over the years has developed what some would describe as like a very healthy immune system of conservatism, where there is this sort of resistance to change, which is in a sense healthy, because Bitcoin does have to remain immutable. I absolutely believe that, to the sort of end of time, there will only ever be 21 million Bitcoin, that you have this protocol that's incredibly resistant to change, to alteration, which is necessary, because that's what makes it sound money, is the fact that, it's nearly impossible to, say, roll back transactions on Bitcoin, to suddenly have these sort of like radical changes in the core layer. That resistance is perfectly understandable, and it's one that we share, and that the L1 remain the same and remain immutable. The question is that we're open to experimentation on the Bitcoin level. And, and that's where sort of, like Alex really just kind of comes into play. It's kind of seeing that we can, that through, by building on top of Bitcoin, we can access these sort of scalability, that we can access these other sort of, these other abilities, whether it be programmability, whether it be transaction scalability, that can allow it to become, something much greater and really build an entire financial system on top of it would really be the sort of goal or the key.
Yeah, right here that I've pulled up on Medium, it says clearly next gen DeFi on Bitcoin via stacks. So would you say then the objective or the long-term goal of Alex is to be a finance DApp layer on stacks, or is this more of a, I guess you could say, Bitcoin DeFi as a service?
Right. That's a great question and kind of gets into where it seems that the kind of progression of Alex has been going towards. When we launched, it was very much a Bitcoin DeFi DApp on stacks with the Ordinals protocol. In January of this year, I think that was a real, paradigm shift that we saw take place on Bitcoin. And it was the fact that for the first time, you had a Satoshi that was worth more than purely its monetary value. You now had a Satoshi that was trading at a premium because of the block space that people could inscribe these NFTs, these data layers, these GIFs or little sound clips or whatever else too. And then, it wasn't even 2 months later, Domo Data just it ran an experiment to see if it was possible to create a fungible token standard on Bitcoin through which, BRC20 emerged and really took off in popularity. And, I believe I think I checked last week of something of, I think we've probably exceeded now like 30 million ordinal inscriptions, but something like 25 million of those or more are text-based, are BRC20 based. And so, crypto is such a dynamic, such a fast-moving industry that adaptation is as important as anything. And what we saw and what we acted on is that we had run a test net for an Alex order book basically through the last quarter of 2022. When BRC20 trading and these marketplaces really took off, we saw a really unique opportunity there to take the order book that we had been working on and how we could now say combine the sort of best aspects of layer one assets with layer two programmability and scalability. And so, through the B20 order book, which was the first, decentralized BRC20 order book, it provided users a different experience where, it wasn't necessarily through the L1 having to go through these partially signed Bitcoin transactions, where you could bring that L1 asset, peg it into a non-custodial smart contract, and now you have its representation on the layer two, which allows for this programmability, which allows you to, interact with it similar to what a centralized exchange experience is like, where you have bar charts and you could put, a stop limit, you could put buy orders and sell orders. And not only that, but we're able to, through the Alex order book, apply roll-up technology, which is that when you place an order through the B20 order book, you do have instant transaction confirmation because that is taking place off-chain on almost what you could describe as an Alex layer. The final settlement remains, the final settlement remains on Bitcoin, because that transaction is then settled out to the Stacks programmable layer, where it's then settled out to the final Bitcoin L1. But it's it opened this possibility where you now have the hybridization of L1 and L2. And so it began with a B20 order book. The Alex Launchpad is also an L1 launchpad, and that projects are able to raise funds, and they're able to do so by the distribution of L1 assets, such as ordinal, such as BRC20 tokens, again, by combining, the sort of best features of L1 with L2 programmability. And now as well with our work with the on-chain indexer, it's this idea that we're helping build what is a key part of Bitcoin financial infrastructure. Because with BRC20, everything is on chain. It is inscribed onto the Bitcoin chain itself. But, Bitcoin itself, the L1, it doesn't read the actual inscription files. It doesn't parse the sort of JSON text. That work is done off-chain by off-chain indexers. And so, when you go to Unistat Market and you want to transact, basically what is sort of verifying that you're actually, say, buying 1,000 Ordi or 1,000 Pepi, that this is valid, that these are valid BRC20 tokens. It's done through essentially an off-chain indexing engine. And of course that, does create the potential centralization risk that, if the on-chain indexer at some point commit, if there's an error, then the transaction will go through where you swap Bitcoin for what might be an invalid BRC20 token. And so in order to go, so, if we imagine the goal is always total decentralization and the total elimination of risk and trust in code. And anything that isn't that is sort of a stepping stone to achieve those ends. And so with the on-chain indexer, we're going from you relying entirely on a single on-chain, on a single off-chain indexer to now, there's basically almost a federated consortium where, there is a record on-chain, not only that a majority of these off-chain indexers agree to a particular BRC20 event, but that also through Stax's L2 programmability, it will independently verify, because Stax can read Bitcoin state, that this Bitcoin transaction has been mined, that it has occurred. So, some of the feedback has been that you could almost better describe this as sort of an on-chain decentralized oracle. But, it'll give you that greater trust minimized assurance that you're not relying on just a single counterparty, but now on, say, a federation that, we hope to progressively expand and grow to validate that, this transaction that you're going to undertake, that you are actually receiving, valid BRC20 tokens. And this creates a greater immutability in the standard. It creates greater security, and these are both vital aspects to see this standard, continue to take off, to continue to grow, and really rival what we've seen with the ERC20 standard and on other L1 chains.
It's funny to say that, BRC20 is in this interesting position. As you mentioned, it is about 25 million of 30 million, and also 18 million of those coming from a single BRC20 called SATS, right? Which is about to move out at the time of this recording. There's been a lot of contention surrounding BRC20. I believe that we're on the same team. I'm a big BRC20 fan. A lot of this audience who listens to this is a big BRC20 fan. Obviously, Alex is. Alex leaned in so much that you guys managed to bring Domo on, right, to the foundation to sit on the board. There hasn't been much discussion from Domo around what that actually means. So for the audience that's here, that's interested, and myself, what led to that decision to reaching out to Domo to say, hey, let's build this on-chain indexer together? And then what are those kind of conversations like about building such a type of product that's really never existed?
Sure. And so, the conversations with Domo, basically surrounded on bringing him aboard as an advisor to Alex, because, he was also familiar with the B20 marketplace, thought it was interesting what we were doing, this sort of experimentation of hybridizing L1 assets with L2 programmability and scalability. And that, we had the mutual goal that we want to see this standard furthered. We want to see greater immutability. We want to see greater security. But if we remain, exclusively to the Bitcoin L1, that isn't something that we're going to see happen. Even the fact that, BRC20 marketplaces exist are because there are, off-chain indexers that are actually following the BRC20 standard rules, parsing all of the JSON file text, and basically having that sort of global state of, which wallet minted when, which transfer to whom, what was the sort of cutoff point, where was this, particular BRC20 token first deployed? When did it mint out? And so really keeping track of all of that, it's not something that can be done natively on the Bitcoin L1. It's a send and receive layer. So, how can we sort of progress beyond, say, just having a handful, which are off-chain indexers that that do have a mutual interest in in doing the indexing accurately. And so there was already sort of a bit of an unofficial alliance, but how can we formalize this a bit more? And most importantly, how can we bring it on chain? And, it was basically through those discussions that we've shown, this is what we've been able to do with the Stacks chain so far. These are the properties that, Stacks has. It's able to read Bitcoin state. It's able to settle transactions onto Bitcoin. That we began by reaching out to Domo, and then we started building this consortium of other key off-chain indexers, such as Best in Slot, OKX, Hero Systems, Unistat, among others. And, and then we got into the actual nitty-gritty of the building. And, so it's a part of the feedback that we've received that, almost calling it an inortical might be perhaps more of an accurate description, is because the indexer, it doesn't implement an on-chain version of an indexing engine itself, which, although that's theoretically possible, it's computationally very expensive to do on-chain. So rather what we're running is a federated model that relies on these key off-chain indexers to validate and submit the latest BRC20 transactions to the on-state, to the on-chain smart contract written by Alex, and which, in turn helps keeps the validators a bit in check. One, by, implementing this sort of M of N consensus mechanism. And there are, more details on that on our Medium page. And also by independently verifying that the purported Bitcoin transaction indeed was mined, which, requires, a Bitcoin L2 such as Stacks to read directly. And then, once the consensus is reached, then there's a minimum threshold where M of N of indexers agree that a particular BRC20 event occurred. It's then recorded onto this on-chain oracle that others can then, ping and reference when it comes to transacting and with BRC20 tokens. And the incentives for the indexers to act honestly, currently they are monetary and reputational, much as they are now. We are in discussions, however, with these same indexers about how we can potentially move towards, say, something like a staking model, where either, inaccurate, dishonest, or malicious behavior by an indexer is penalized by having their stake slashed. And so, just further aligning the sort of incentives. And, just from looking at some of the, podcasts or discussions surrounding the on-chain indexing, something that we want to keep open is that this is something very new, just recently created, and that we are are by no means trying to create, say, a BRC20, cartel or existing group. Because, then the sort of conversation comes, well, like who decides who gets to be a part of this club and who doesn't? And, we're absolutely committed to sort of open source. And so in the coming days, coming weeks, there will be further, publications about how we can open membership really to all, although, given particular, and I would say requirements that our community could say universally agree upon, whether that be, say, standard open sourced indexing rules, standard open sourced reference implementation of the rules, where in order to contribute to that on-chain oracle, that the implementation is open sourced, that there is an operating history of, say, of a minimum amount of months, that the implementation has been peer reviewed and approved by some of the existing on-chain members, that the implementation have required endpoints, that the project have their particular published guidelines that others can follow. And also we want to create also just ongoing monitoring, say like a dashboard that can have a real-time display of the performance of these contributors. And so, this is something that we are only looking to sort of grow and expand, and every time have it more decentralized, have it more risk minimized, so that we can, just both continue to grow the BRC20 standard, its immutability, its security, and that by doing so, that organically grows the sort of community around it. That's how, as you mentioned, like how do you take, say someone who, I wouldn't say entirely a Bitcoin maxi, as then you're almost getting a little bit ideological, but someone who's Bitcoin centrist and has been curious about this token standard, but, kind of, is still scratching their head a bit, kind of sees, that some things can be done better. And we can implement these sort of open source tools and, and just this sort of very transparent implementation that lends to it this sort of greater security, so that people experiment with it, they begin to hold it, and then you have this just sort of positive cycle of growth and reinforcement, and where people, look to Bitcoin and see, it isn't just, say, digital gold or a store of value, but there are these, incredibly exciting things that, occurred on Ethereum, occurred on these other blockchains, and now are coming home to Bitcoin. And I think that's something that, is a net positive, or, when universally, whether it's for the community, whether it's for the security budget of Bitcoin, and how miners in particular have benefited from the fees of BRC20 and inscriptions, to projects and developers that then come to Bitcoin in order to build, and to be able to sort of raise through the distribution of BRC20 tokens, through the distribution of on-chain ordinals and NFT projects. And that's, and that we sort of achieve through, again, combining the best features of L1 with the sort of scalability and programmability of L2.
Oh man, you're fantastic at explaining very intricate and complex ideas.
Well, thank you.
I do find it fascinating that Ordinals has introduced multiple avenues of additional flow, right? Where Ordinals now you can flow different types of data into the blockchain, up to 4 megabytes per inscription. There's now a flow of different types of capital that can go into the ecosystem, whether it's through BRC20s, whether you want to try this new fungible standard or non-fungible standard with BRC20s, whether you want to go to, open up Alex and go into go farm some different types of tokens. To my most interesting kind of perspective is the flow of developer activity that's come onto Bitcoin because of ordinals, and then also the different types of products or I guess you could say apps that exist on other chains, and seeing how you can implement it on Bitcoin in this non-Turing complete way, or this standardized type ecosystem. So for example, here you guys are, building an on-chain indexer, where you say, it's pretty akin to an Oracle, which is what Chainlink is on Ethereum, which is similar to what sequencers are for layer 2s on Ethereum, or different types of smart contract platforms, right? So you guys are really on the frontier, or say cutting edge technology of really trying to build out what it is. I do find it very interesting to see the introduction of a token or some sort of staking model to keep, the 5 different centralized indexers honest.
Right.
There is some sort of, I think, incentive misalignment there. It'll be interesting to see how you guys implement it, because, these 5 different parties, they all create their own indexer, right? If they're putting up this new token to stake and then their dishonesty gets a slash, it's like, what's the incentive there to keep them to do it initially? Although they do have their own platforms, right? So them being dishonest also messes up, their own revenue on that type of platform. So when you guys introduce more information in a few weeks, it's going to be something that I'm actively following. So I'm interested to see that type of incentive model introduced to this new Oracle-like thing that's coming to Bitcoin.
Right. No, absolutely. And just to be clear, these are like literally, live conversations that are ongoing right now. And, the sort of same points that you're bringing up, these are the same points that are actively being discussed, and how we can, and then how we can ever move towards, a better model through which we can do the sort of like on-chain indexing. And that, again, under ideal circumstances, when people think of an on-chain indexer, they would likely imagine, like an actual on-chain indexing engine, which, was something that, again, initially we tried, but only, to find that it was computationally expensive, because particularly for those JSON text files, you have on the smart contract level, it's difficult to, say, parse every character, particularly when there are these very many blank spaces. And so it was getting, computationally expensive to do so. Another reason is also that BRC20, in the sense, it kind of remains a living standard. Like an example of that would be that, the fact that, we have things like cursed inscriptions, which, say, have been assigned a negative number because they weren't, like indexed as they should have been. Another was, I believe it was back in June, you had the introduction of pay-to-witness script hash that were inscriptions that used actual SegWit witness data, just like normal inscriptions, but instead of using, it didn't use the Taproot P2TR. It used the P2WSH standard, and the fact that it used ECDSA signatures instead of, Schnorr signatures. So that was around inscription. I think it was, like 10,300,000. And then with that inscription, briefly, there was a sort of divergence between indexers that sort of recognized this new kind of written inscriptions as valid, and those that sort of didn't. And so, briefly, there was a sort of divergence there. Then there was, ultimately the consensus that indeed, these are in fact inscriptions. But, so it's the fact that people continue exploring with these new data models and these new ways that we can advance the sort of token standard. And so to sort of maintain that alive and keep the conversation ongoing, and also, again, to sort of increase the size of this consortium. And so, it might start with an initial 5 or 6, but, the goal is to ever increasingly expand that, because that only sort of strengthens a federated model and minimizes the sort of trust that's required. But of course, as these additional, parties join, there's, how do you, how do you deal with the fact that potentially one of them or another, even if they aren't perhaps acting maliciously on purpose, perhaps they're exploited by a third party, and now there's perhaps something like a monkey wrench that's trying to be thrown into the works, and how can we minimize the potential of those events occurring? And so it's something that although it's a conversation that is currently live within, say, a smaller group, that conversation will only grow to, a larger group of people and community. And as ever, each of these on-chain indexers, whether it's, it's Alex, we're an entirely decentralized project. It's our community that sort of leads the way. Equally with these off-chain indexers, it's the users that sort of come to them that really query the sort of health, and that they receive that sort of a feedback, payment, and reputation from. And so, it's just about aligning these sort of mutual interests and having the appropriate, carrots and sticks in place to ensure that we're progressively moving towards an ever more decentralized and immutable standard with BRC20.
I'm very excited to see what comes of this. There are so many moving parts, not with just BRC20, but the ordinals, theory, and protocol in general. This conversation, comes on the heels of a few days ago, the great inscription conversation, the inscription numbering, right? Such a small thing, seems so small, but it's so culturally relevant and important to so many people. It comes down to, you realize that Bitcoin is governed by social consensus, and
absolutely
sticking to ordinals in general. Kind of how I see it is that it's social consensus that eventually turns into technical implementation, because there are no smart contracts. Whereas on the opposite end, when you're on Ethereum, generally people are putting out the smart contract and the technicals first, and then you're trying to garner social consensus after. So it's a completely different paradigm over here. And it's always evolving from the conversation of the community to where the protocol is going, right? To where what are the Bitcoiners think about it? It has such as this built-in history. It's really fascinating. But one thing I've noticed with, new protocols or you say these financial hubs or financial layer like Alex is you offer all of these products. And sometimes it comes into this chicken or the egg situation where it's like, how do we attract users? Will users want liquidity? Okay, how do we get liquidity? You need users. It looks like one of the attempts, to at least start, overcoming this battle. And it's always a battle within traditional finance and on-chain and off-chain finance. Is Alex has put out this bridge, as you mentioned, to grab some of the liquidity from Ethereum and BNB. I'd like for you to just, take us through the thought process of bridge. What was it hard from a philosophical perspective to venture outside of Bitcoin when it has such this maximalist culture that kind of exists with it, where a large portion of the community outside the ordinals, will be very resistant to trying to bring other types of quote unquote shit coins, they will say, into the ecosystem.
Right. So what I would say is that, basically what we've always seen as a long-term goal is to enable, all crypto users to have the security assurance of Bitcoin settlement, if that's something that they desire. And we want to make that sort of onboarding process as sort of frictionless and as smooth as we possibly can. And so, sort of an issue with blockchains not being interoperable is that, you had, like Alex, which is built on stacks. And so, you almost kind of have a sort of like island nation with sort of like limited, with a limited number of ports or people who can come on or off board in a particular day. Whereas, it would be the case that as our community grew and we had, and that often tends to be the case that oftentimes a lot of users from other chains find that what we're doing is really interesting. They would ask, how can I bring my liquidity onto Alex? And it would, previously involved a rather elaborate process where you would have to go through, say, a centralized exchange, swap into a stable coin, then swap into stacks, sort of bring it onto Alex. And aside from the sort of custodial issues of using a centralized exchange, there are also other technical issues, whereas for some users that can, potentially be considered as a financial event. And so to us, it seemed that we could sort of create, say, on this little island nation, something like a small airport or a small runway where, users could, and again, we aren't necessarily bridging every ERC20 token to Alex. Obviously, we've begun with just Ethereum, with Tether USDT on Ethereum, as well as, Tether as it is on Binance, and created basically a transparent smart contract through which users can, say from Ethereum, lock that USDT into this multi-sig smart contract, then bring that onto Alex where SUSDT is emitted, where they can then use that on the Alex layer, and then at any time move that off of Alex again through the sort of bridge and exit out either onto again on the Ethereum layer or on the Binance layer. And inclusive that, also like the bridge being a work in progress with, connectivity to other chains definitely being something that's an open possibility in the future. And it's important for a variety of reasons, not only in terms of liquidity, but something that you mentioned that I'd circle back to would be something like developer activity. And that, really, like how do we grow our sort of user base, really? How do we grow our sort of community? And you have to have really a cycle of positive reinforcement where you have liquidity and community, which attracts developers that create interesting things that then attract more liquidity, that then attract more users. And so something that I actually wanted to sort of tease a bit, and that will be will be sort of, rolling out over the coming days and weeks, is that, we are making a bit of a pivot at Alex from Bitcoin DeFi into a transformation into something like the creating a finance layer for Bitcoin. And what do we mean by that is basically we already have this kind of starting point with the on-chain indexer of creating these sort of infrastructure tools that are beneficial to the Bitcoin finance ecosystem as a whole. And so what we've seen that we can provide through Alex is basically, composable blocks of code that we can provide to developers who are interested to come and build, interesting financial applications on Bitcoin. That they will have, Alex APIs, they will have software development kits. We've opened up Alex grants. We've, where those who, apply for the Alex grant and receive them now have financial support. They also have the mentorship of the Alex team, technical assistance, the networking opportunities that sort of Alex has. And so that we can really create a thriving financial ecosystem where people are exploring these other really interesting instruments, whether they be, say, things like perpetual futures, or whether they be, options, or these other more exotic, interesting instruments. We've already, instead of having everyone that comes on board having to sort of like reinvent the wheel and start from square one, it's really a lot easier if they can, repo or GitHub, copy paste and start, and just start from there, rebuilding, customizing, and having those sort of basic building blocks. And another key point is that there'll be unified liquidity across application. Because as you mentioned, a really key point about DeFi that creates a little bit of a chicken and egg situation is that you need a minimum amount of liquidity for DeFi applications to work as they should. You really it's very difficult to have MemDex without a minimal amount of liquidity, because otherwise just slippage is just so massive. And so, that's really, I would say, as well as just the sort of technical difficulty that, creates this sort of moat around Bitcoin DeFi, is also then, you not only have to be good as a builder, but then you have to be able to sort of like round up this sort of, initial bootstrap the liquidity to launch things and get things going. So now, for users who might come to the Alex layer, not only are there these basic building blocks of code, but now, once your application is up and running, you're now sharing with the unified liquidity of the Alex ecosystem as a whole. A TVL, currently in the low 8 figures, just to get things going, get things off the ground, and then those projects that then do launch. We can use things like the Alex Launchpad to sort of launch those tokens to a decentralized community. And for people who are interested, because those builders likely might be coming from other blockchains, they can let, their sort of like friends, their followers, their community know. They now have a bridge through Alex that they can, in a decentralized way, onboard that liquidity onto the Alex layer stack ecosystem and participate in those IDOs. And that creates, again, that increases bridge TVL, that increases AMM TVL. That AMM TVL going up makes it operate more smoothly, which makes it a more attractive platform, which brings more users, which then attracts more developers. And now we've created this sort of organic cycle of positive reinforcement where things begin to take on a momentum and life on their own, because you're consistently seeing this positive reinforcement and growth from developers to increased liquidity, to increased community, to more developers. And so really that's what we are looking to move towards and expand over the coming, I would say, 12, 24 months and going onward, is just really facilitating it so that, more builders can come. We have an influx of fresh eyes, new ideas, new users, new ways of doing things. And as the sort of community grows, the sort of direction of the platform is increasingly dictated by them, and then the direction that they are sort of taking us in and growing. which to me is really probably the most exciting aspect of Web3, is that you have this sort of like grassroots, bottom up dictation of what a project should become rather than it being top down. So that's only something that we want to sort of like further encourage and grow and reinforce as we move ahead.
I think those who have been trading meme coins over the summer have learned a lot about what the minimal viable liquidity is needed in an LP pool from the amount of people getting right from the LP pool, and it goes zero.
Totally.
The move, or I guess, maybe just the mindset shift from Alex as, adapt to being the financial layer, providing everything from services to liquidity to users, I think is the right direction. There really isn't anything that exists like that. I mean, maybe there is on one of these other side chains, but, being directly in relationship with stacks on the L2 and then with the ordinal community on the L1, you're like a perfect, friction barrier to assist whatever those needs are, because as we know, most people in the ordinal community is generally retail or just small, developer teams that are generally in the need of liquidity. And then on the L2 layer, right, they have the liquidity and the funding, and they need the users. So there needs to be somebody there to kind of help bring all of that together. And it sounds like that is exactly the plan of the Alex layer. Dude, Hayden, I appreciate you for coming on, man, dude.
Awesome. Thank you.
Incredible explanations. Probably one of the best that I've had in a while. Very thorough, very thorough, very insightful. So look forward to seeing what you guys are doing. You with Domo and everything else. I'm a big fan. And as you saw, as we were going through the screen share, I've been using Alex Bridge for a few months now. I think since March.
Thank you so much. Yeah.
We're dabbling around with it. Of course, liquidity, but we're all working it together, and we're at the peak of a bear market, and we all know what next bull market brings. It's all about making sure that we're ready for that from a structural standpoint for when that next wave comes. So appreciate you for coming on, man.
No, absolutely. And, and thank you so much for the questions. Love discussing it with you, and then thank you for the work you do as well, because it is so important, to have voices like yours that are kind of spreading the message, educating users, keeping the community up to date. And yeah, we're incredibly excited for the next, for the next 12, 24 months going forward. And not only from, what we're doing on the Alex side, but even with, stacks, you have, SBTC, you have the Nakamoto release, so having, transaction times come down to like 5 seconds will also be just an absolute game changer. And so, I really appreciate users who are here now during the sort of like early days when you have to, kind of wait, sometimes 10, 30 minutes for transactions to settle, because I think later on, sort of kind of looking back, it'll kind of be those sorts of like OGs, people like yourself and the communities that you help build, that sort of like made this all possible. So, I love that we all have an important role to play. And yeah, they're very excited to, potentially come back, discuss with you again in the future. Happy to do so. And again, excellent work. Really enjoyed the session.
I appreciate that, man. Yeah, we're going to be the old timers yelling at the cloud saying, I remember when I was stuck in the mempool for a day because I accidentally put the too low of sats per V.
No. Like I'm telling you, like people are going to complain that like it's like 3 seconds is too slow. Like, so, and then, yeah, it'll probably, like trigger some people a bit, remembering back when, sometimes mempool was like 1-2 days long. So, but yeah, it's great to see it really from the beginning to where it's come now. And, again, we're all incredibly early. It's important to never lose perspective of that. During a bear market when, like AI might seem the sort of next tech darling, just remember, fix the money, fix the world. What crypto is doing, there isn't really no other substitute for that. What Bitcoin does, probably no other technology was sort of like ever parallel in quite the same way. And we're sort of in the right place, heading in the right direction. And so let's just keep building. That's really all it comes down to. Keep building, keep spreading the news. And, the sort of truth will be self-evident,
That it absolutely will. Fix the money, fix the world. Thank you guys for listening and watching. We'll catch you next time.
Awesome, guys. Thank you again. Take care.